next on the list is Sappi, which of course is one of South Africa's oldest and largest kind of industrial giants, but it's a little bit of a shadow of itself. Remember, its history was as a forest and timber producer, and then Eugene van As, the CEO at the time, went global buying Scott paper. So it moved aggressively into coated wood-free paper, which is where you've taken paper and you've put a shine on it so it can be used to print an annual report or a Vogue magazine or something of that sort. Recently, though, it's tried to gear down. It's been a price consolidator, shut down some of its operations, and it's gotten into something called chemical cellulose, which is in fact a cellulose product which gets used in fabrics. Market capitalization 31.6 billion rand, so not small. Price to earnings ratio 9.93. Dividends, it has paid dividends, but it's showing up on our indicator there as not having a dividend yield, which means that it probably skipped a dividend in its most recent reporting period. It reports quarterly because of its dollar earnings and its US orientation. Okay.
Yes.
What to say about them?
Well, in their last quarterly results, the first quarter results, that was to the end of December, it actually didn't look too bad. We saw reasonable revenue growth, we saw margins improving a little bit, and they're definitely moving in the right direction. The problem is just they don't have a history of constantly moving in the right direction.
You're right, it's been a company that's been in sort of turnaround mode for about 5 years. They've got quite a lot of debt. They also have a habit of putting results out which have a lot of special items being like taken into and out of the numbers. So they'll say we've done fine in this quarter excluding special items.
Absolutely, it's lumpy and the visibility is very poor, which makes it a very difficult long-term call.
Yeah. Okay, and it must also be said that the chemical cellulose business sounds quite exciting, but it's still only about 15 to 20% of turnover and profits. But you can see what management is wanting you to do is to draw your attention to that, because that sounds like a much better story than saying, you know, we experienced more declines in sales of our core product.
Yeah.
Because magazines are not dead, but magazines are a tight and declining part of the readership market globally, it seems.
Absolutely. I mean, if you just look at magazines in general, the way that reader habits have changed, it's not like people are reading a magazine on a tablet, it's not like a book, but people are using Pinterest to look at pictures that they really enjoy, or they're reading articles on the Huffington Post.
Or someone's sending out a pamphlet via PDF distribution instead of printing a whole lot and handing them out.
And when last did you get financial statements in a big, thick book format?
No.
It doesn't happen often.
It's a mistake if it ever happens, because you feel like you're going to go crazy because you get one of those notes from the post office saying that there's something large in your post box. And when you get there, it's some horrible, clunky report from, you know, some prospectus that got sent to you by mistake, it
Probably
seems.
from 2013 as well.
Yeah, it's too depressing. Okay, but as far as the company is concerned, to be fair to them, look at the share chart, because it looked like it was dead and buried back in 2012, 2013, but I guess the strong European and US presence has given them a little bit of a lift when reporting in rands, right? Or when people experience the profits in rands.
Yes, absolutely. I mean, US earnings have been very volatile, but rand earnings haven't been that bad. And once again, because they report in US dollars and most of their operations sit in South Africa, that positive cost impact from the weaker rand has really carried them over the last few months. And then the valuation actually doesn't look too bad either.
9 PE.
Yeah, you're talking about a forward PE of 6.5 times, which relative to the peer group doesn't look that demanding.
And to be fair to them, also they have that huge biological resource, which is the trees that have been cultured over the years. Okay. What about management? Because after the Eugene van As retirement, we have Rolf Butcher, who was an I think, Imperial Group guy that unfortunately stepped down from the CEO position. Steve Binney is the current CEO. Seems to be, you know, an experienced guy coming through the industry.
What's very interesting is that he also has a consumer background, and this specialized cellulose business is also very consumer focused, or it has a consumer angle to it. And perhaps he's the guy to carry the company forward and really expand that cellulose.
And another thing I think I must just point out is that 4 or 5 years ago, I was very worried and negative about Sappi because of the debt. But I don't know whether it's luck or maybe I just called it wrong, but debt has been very cheap in the European credit markets for the last 5 years. So they've gotten away with it. They've actually brought down the debt levels quite well because they've had cash flows from the operating business. However, we always have to call it hot as of now. Would you be buying these now in the market, hot or not?
From a long-term perspective, it's too risky from an earnings visibility point of view. So for now, I'd have to be not.
Not. Okay, good. I'm going to go not as well.